back to the rationalinvestor.com's daily brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the rationalinvestor.com's daily brief. Happy Friday, TGIF. It is 16th of June. Actually, I think what I'm probably going to do is I'm going to do this daily brief, and all my positions are basically closed up. I think I'm probably just going to head out on vacation here after the market's done here today, and I probably won't be back until the end of next week. So just FYI on that. So there'll be no broiler chicken show this weekend, and I don't even think we'll probably even do daily briefs and all that kind of stuff through this week. I doubt it, but anyway. So just a quick summary. We have theoretically on Fridays, we have special guests, although they're very hit and miss these days. I think there's a gentleman he's coming on who does our blog posts. And I kind of wanted him to walk the public through his latest blog post, just so we have it on record. And it'll be behind the paywall, of course, in the after party. So hopefully he'll be here for that this afternoon, but in about, I guess, 25 minutes. So we'll see how that goes. Should be just a short summary, and then maybe we'll do like a Q&A. So if you do have questions and you want to look at stuff, feel free to pop in the after party, and maybe we'll spend a bit of time doing that. And then, like I said, I'm probably just going to head out and on vacation here. So I'll just do a quick review of the things that I've seen in the market, and obviously some overriding sort of econs and news and stuff. And then at 9:30, so in about 25 minutes here, we'll wrap up the free broadcast and head on over to the after party, because that gentleman's time is relatively limited. So as I like to do on a regular basis, just sort of give you an idea of what sort of a day trader sort of life looks like. We actually had a signal fire on the breadth indicator. I guess I'm not supposed to show you guys these things in real time, though. And just FYI, if you are a site member, I'm not quite sure how we're going to do this, but I would kindly ask site members who are paying subscribers for the signaling system and stuff like that to maybe not just sort of share them. I know it's exciting when a signal comes in and all that, but it's the feedback I'm getting from the team is they don't like people posting the signals in the lounge. I don't know. We'll work on that over the coming week. If anything, I'm going to take a break here this coming week. Maybe the whole team will have a different approach when I come back from my little vacation here. We did do an opening range trade. And actually, this is one reason why I don't like doing the opening range trades is it failed today. And so as a result, you start the day down a whole bunch of ticks, which, as you can see here, sort of gets me into sort of almost like, okay, now I got to spend the rest of the day trying to claw my way back, which is kind of difficult. That's not the best mindset to start your trading day. And I've noticed kind of slipping into revenge trading a little bit because of that. So it's something that I have to deal with. I'm wondering whether maybe I'm just going to put the opening range trade set up on the back burner for the time being. I've noticed that if I just concentrate on shorting against highs, buying against lows, it seems to do fairly well. Although, like I said, you can see I was chopping around. I did take a trend continuation trade, which was, and here I am trading off the 1 minute chart. So don't like that. But did have a couple quick scalps to sort of get me back, trying to claw my way in. Then I had another one that failed heading into the daily brief here. So you can see on balance, basically a scratch day, but I've got to this underwater position on the opening range trade. So that sort of tells you my day, a little bit sloppy. did get a buy signal on the algo, and of course did the trade, but I won't talk about that here. I'm not quite sure how we're going to handle this going forward because I do want to be taking all the trades. But anyway, so like I said, that's something we have to sort of figure out going forward. As for actual, like my classic short against, in fact, I saw somebody put together a YouTube short about shorting against horizontal support and resistance and foggy buggies and all that kind of stuff, and buying against horizontal support and ATRs and foggies and stuff. And this is like a total no man's land trade. There really shouldn't be anything for me to do here at all today. So kind of forcing the issue a little bit. And of course, I'm an open book. I tell you when I do good, I tell you when I do shitty. And unfortunately, not every day is going to be an awesome knock the cover off the ball day. Here's another example where, their settlement banging against a couple moving averages. I would like to short against these highs up here, buy against all these lows down in here. And so we're basically sitting in no man's land. And really, and then, to finish off this, if we look at the stock market, of course, this is what everybody's been sort of talking about of late, the silly tech stocks and the stock market itself just booming higher. Is this a megaphone? I don't know. We're kind of losing the top of the megaphone. We are definitely going parabolic. It was interesting how I shared a piece from Rick Santelli a week or so ago. And the options traders basically saying that, we are heading into the June options expiry event window here today. And I show you guys this just basically almost on a daily basis. I guess a weekly basis, where especially with this being the June contract, this is a big monthly contract. A lot of institutional players use this. So we can actually look at the puts as sort of a where do the Wall Street want the market to go out? What a big surprise. Here we are 441 and an eighth, and right now sitting 441. My hunch is they probably want to make sure that this market goes out above 442 there, so that all of these options expire worthless. It's pretty cliche what they do here. And you can see this is a lot of money on the line here. And if you go stock by stock by stock, in fact, probably even a better example of this is to look at the tech heavy NASDAQ. I noticed a lot of there were a lot of people that shorted Apple. I did a demo trade for you guys a few months ago. Shorting Apple, so I wouldn't be surprised they took Apple up to new highs to make sure that all those puts expire worthless. But here's the tech-heavy NASDAQ, same sort of idea. If they can get the market to go out up top here, all of these big chunky puts all expire worthless. And this is all that they're on the hook for. And I wouldn't even be surprised if they ramp the market up right into the close here to make sure all those options expire worthless. Interesting. I put out I was watching YouTube videos and all that kind of fun stuff. And one gentleman, actually, he was a Southern gentleman. Don't think I've ever listened to him before yesterday, but very interesting guy. It might be worth checking in on him. He has a very down-to-earth approach to the market. Mike Jones Investing. I think he does pretty well. 61,000 subscribers, so he's kicking our butt with regard to subscriber base. Oh, and look at that. He's blowing us a kiss, too. Anyway, he did point out, and I thought it was a pretty interesting tell, that when the NASDAQ actually goes quite a bit above the 150-day moving average, which is what he likes to use. I don't know why. But when it gets above 25% above, and you can see here we are 19, and I think we're roughly around 20%. He had noticed that usually following that event, you get a pretty big drawdown in the market. Sometimes it's just very, very paltry losses. It's only 3%, 5%, sometimes 17%, 30% here. I would say that seasonally, I didn't notice too many of his references were actually June references. Now, we know that the seasonality of the market goes that usually the market likes to bottom about the first or second week of July. We're heading into earnings season. That's usually when the market sort of shakes off what the current conversation is and gets back to sort of, okay, are these companies actually making money? And I'm seeing that. I think we're going to head into a little bit of a vacuum here, kind of like what we talked about with the stock market, good old ES here. We're going parabolic and all that kind of fun talk. If we look at our 4-hour chart, we probably see that megaphone pattern. And I could very easily understand that, maybe we do something like a 50% retracement from that recent blow off top. So it would come, that tail right there, that big tail right there. There's some pretty big, there's a whole bunch of trap bears all in these tails that would love to get released. So I do like the idea that we're going to get some sort of pullback here. And as you can see, that's going to represent about a 2% drop. Usually the rule with megaphones is that the first stop of the megaphone is basically the midpoint of the megaphone. And usually you can define the midpoint of the megaphone where support and resistance actually comes in. So actually I do kind of like a dump down into that area, which would be what, about 3 or 4% drop. Not huge numbers. Probably what ends up happening here is brick and mortar does okay. Dow sort of, outperforms. NASDAQ has to take a bit of a pause, and the NASDAQ dumps a little bit more egregious. When I look at the NASDAQ, same sort of logic. Oh, gee whiz, you can see. In fact, the market's even telling us exactly where it wants to go. A big old hole on the charts there. And, if we do just a simple measured move, that's about a 5-6% drop. And if we go back to Mr. Southern Gentleman's talk, here's June 2009. Well, that was a 7% drop. Then he has another one, June 2017. That was a 5-6% drop. You notice there aren't too many other June references here. So can we see maybe a 5 or 6% drop there on the NASDAQ? I think that's realistic. I don't think it's unrealistic. Having said that, do I actually have a trade setting up here? Not yet. What I would say is, actually, I don't know. Yeah, I think I did it on the NASDAQ over here. If we do things like fog and bombs off of the bottom, chaos, there we are, 2.618s. I don't think we can get up to 4.669s just yet. I think we're probably going to have to swim around this level a bit. But probably more importantly, we're coming up into the original market structure top. So if we do things like reload zones, it doesn't surprise me. The original breakdown point is 78.6. That is a double top fail. What I often tell people in our education programs, actually level oneers are doing this right now, that this is your institutional fingerprint up top here where they stopped the bull and actually turned it around and turned it back into a bear. So probably where the bottom of that range is, notice that 78.6, the big M top here, that should be a bit of a fight. And then, conversely, we often talk about things like what's a natural level for price to come back down to initially. 38.2s are probably pretty good for that. So that's down around 13.5. And as we said there just a moment ago, maybe a 5-10% correction somewhere in that neighborhood, I think is completely realistic. That turns out that would be 12%. And then also notice, that was the gap that I made reference to on the futures. Also notice that there's a gap right there as well. So somewhere, some sort of pullback into this range seems completely realistic. And historically, normally, the market usually likes to bottom like that first week of July. Keep in mind that this is going to be a bit of a wonky one. This whole damn 2023 is wonky, eh? July 4th is until Tuesday. So that means, I mean, that's your American holiday. Of course, July 1st is the sort of everybody else in the world, Canada Day, all that kind of stuff. That holiday will probably be Monday. So this whole period is just going to be really weird. So that's what I would be expecting if there's going to be some sort of pullback, some sort of correction. It happens into this window here. And ironically enough, the blow off top that all these guys were talking about originally, well, there it is. It's happened in glorious Technicolor. Thought it is interesting to see that some of the names, TRI's key reversal screener is just killing it again. This was the latest signal that fired, and you tell me, is that worth the price of a subscription? I mean, look at that. That's just basically rum straight up now. So that's killing it. And then, of course, I've been uber bullish about things like Intel. I mean, that thing's just going crazy. I can't even look at Toyota Motor Company now because, of course, it's been going crazy. But if anything, maybe we're going to get a little bit of a pause in some of these tech stocks. I did notice some of them are backing off here a little bit. So maybe we get a little bit of a pause there. If I'm not mistaken, I think NVIDIA was actually I did notice in that gentleman's video yesterday. Oh no, there you go. Still surging. What I did notice about this, which caught my attention, was notice the divergence is starting to build. So you can already start to see the top forming. Willie is stupid. There's everything that we teach you in the education program. The volume surge is backing off. So the volume impetus is starting to wane. If we get a day where you do less than this, whatever the lowest up bar here, it looks like it's about 38 million or so. So far, we've done 34, but they'll probably do that by the end of the day. You can start to see all the divs starting to form. And then once the divs form, then we get, some sort of market structure top. And considering this is a market darling, probably what ends up happening is this thing breaks last. And I would be sort of thinking that when this thing finally breaks, and of course, that's going to get the public's attention. That's what's going to be sort of across the newspaper headlines and stuff. Ironically enough, that will actually be the bottom of the market because everybody will go short saying, oh, NVIDIA is finally breaking. It's a bear market, right? And they all go short. And then the damn market bottoms. So based on that kind of image, I don't see any trade there just yet. And kind of like what I was saying there about the NQs there, I don't actually see a top just yet. I think we have trade location. We have indicators ridiculously overbought, but I don't see any divergence here yet. So if anything, we're probably going to have to wait for some sort of divergence to form here. And then there might be a nice little kind of like think, Colin and the Colin pump chaser zone guys. I do like the idea that maybe we get, and it might be a really, really sharp pullback into Colin and his pump chaser zone going forward. And if you did want to try and play a lot of these names that have been breaking out recently, that would be sort of the level to concentrate on. All right, to finish this up, we'll take a quick boo at crypto. The original message here really hasn't changed. There's not a lot of change to this conversation. We had a topping out pattern here in actually very typical seasonal manner. Sell in May and walk away. Market's been grinding its way lower. We did just hit 38.2 off of the entire range. And our rule, think Colin and his dump chaser, I guess in this case, pump chaser zones. If you actually started to get signs of divergence develop down here, and then we got W starting to come in, really, actually, that would be business as usual. Nothing really out of the ordinary. I think what's happened here, of course, is following the Fed announcement, we had a very quick drop, boom, straight down. So if anything, a little bit of a panic dump. And of course, the FUD about all the various different exchanges and stuff, Binance and stuff. I've heard recently that BlackRock is planning on coming out with an ETF. So if anything, it makes perfect sense that BlackRock owns the political machine in the United States of America, and really Canada, to that matter, is no difference. So as a result, basically, BlackRock is saying, all right, time to now force liquidate all of this potential competition. I've talked to you guys repeatedly about this. You know, call it crony capitalism, call it 21st century capitalism, call it we're Dickinsonian, we're heading back to a Scrooge and Christmas Carol kind of world. Well, this is the way that our life is. And so it shouldn't surprise anybody that we're hearing talk that US regulators, who are just nothing more than the puppets of the capitalist machine, are being sicked on all of these international exchanges. And of course, you know, they're going to use money laundering and they're going to use tax evasion and all of these kind of rules to try and, you know, make the crypto kids' life as hard as possible. But really, what's going on here is that the 1% is trying to secure its business model so that it basically has a monopoly in the space. What a surprise. Really, nothing really new going on here. I will say that, you know, if you do a lot of business on these various different crypto exchanges, you better have your exit plan fully in place. It wouldn't surprise me. You know, I understand that I think almost all North Americans and Europeans are going to be basically forced exited from Binance here going forward. I did see that Sjord was passing out information about various different exchanges are clamping down on KYC, all that. So, you know, it just goes on. Having said that, is there anything to actually do on this position or this trade right now? No, it's just big hurry up and do nothing. If anything, based on this setup, my rule is if 50% of the anticipated move has been hit, which is basically a move back to 38.2s, then I get permission to move my stop to scratch. Woohoo! So worst case scenario at this point here is I just walk away at scratch. Now that's one particular setup. It's one particular trading plan. There's 100 different ways to skin this cat. In the after party, I suppose I'll show you what we've been doing based on the algo. It has gotten extremely oversold. And I was warning people yesterday that, you know, usually when the algo gets ridiculously oversold and buried in the embedded short levels, then odds are we're probably going to get some sort of shift in sentiment. So in a weird sort of way, I would actually fully expect, I mean, it should be interesting just to draw this out, but I would fully expect that we could very easily rally right back up into the original breakdown point here. It's not really a buy signal for me because, of course, I need to see W's on the other side of this trend line for me to actually get bullish. Do I expect this to happen? No. My hunch is, you know, like I said, there was a big dump following the Fed there the other day. Whole bunch of trap bulls trapped in this wick right up in here. And my hunch is they rally it up back up into this wick up here. And that's where you're probably going to start to see some sellers come out of the woodwork. But, you know, I mean, that's getting into the prediction game. I don't think it's in anybody's interest to play the prediction game. What I would just simply say is, you know, identify your setups, trade your setups, live with the results. As for the broader crypto market, I guess we'll just finish off with that. I thought I had it on here. Anyway, yeah, come on the daily, the after party, and we'll talk a little bit about what the algo's done. I just showed you quickly there. I don't really want to get into that on these free shows. I think this is actually no, this is not what I want. Let's see if I can find this. Just to finish off this free broadcast, what's the difference between Bitcoin, which we have here, the 3-step setup, and then the crypto market cap, we had an El Tango short setup. So is there any difference in the total market cap play in the market right now? I mean, you can see the irony, and this is exactly what we teach you in the education program. So nobody should be surprised that number one, Brian is touting this. Number two, that the setup actually worked. I mean, it's so time tested. It's got a very, very high probability of working. So Anyway, point of the matter here, we came up into fog and bombs, which I don't happen to have on here, but interesting trade location. Indicator confirmation, everything about the L Tangonator. So level oneers, this is what you're basically here to learn. We dumped down. It actually looks like we hit 2-to-1 profit objectives here on the altcoins. So believe it or not, I actually think you might actually see a precipitous rally. And again, kind of like the Bitcoin trade, don't be surprised if we actually come up and we have to play with that little wick right up there. Same thing as the Bitcoin. Probably have a whole bunch of trap bears, trap bulls, beg your pardon, in this wick right here. But I think to all intents and purposes, I think this trade's pretty much done. The way that I would approach this is you want to sell half on the initial take profit level, whether it be 2.618, 50% level is probably the best place to go. And then just have your stop at scratch on whatever remaining you have left on the books and just see where the hell the wind blows you. So that's what I think is going on here. I would actually, the sad part about it, of course, is there's probably a lot of people in the public that are coming to crypto and thinking about selling their crypto now, which I don't think is very smart. I think that's not, this isn't a good trade location to do that. I'd also say too, though, that this isn't really the best place to be a buyer either. You can see, look left. I mean, next key support is really down in this area here, and that's where your trend lines are. But considering we're coming into the weekend, and really we shouldn't expect the real dump in earnest until over here, like 2 weeks from now. Could we have a week or two period of backfilling just to drive everybody crazy? Sure. Seems like perfectly par for the course. All right, so that is 9:30. There is your summary. Probably the way that I would describe this for crypto is it's probably too late to sell and probably too early to buy. We're kind of like in no man's land right now. We're right at the 50% level. This is where if you were shorting, you'd want to be taking profits. We saw how Bitcoin, that setup just, moved stop to scratch at this point. So you shouldn't lose any money on any shorts right now, but I still think we're probably too early to be getting too aggressively bullish. But in the after party, I'll show you that the algo actually wants us to be long now. So go figure. And of course, I have one trading plan that is about the algo. And so like a good trader, is really you can only judge how good you are at this game by do you actually do what you say you are going to do. And I see a lot of people in this world say they're going to do one thing, and then they ultimately end up doing something completely different. That is the definition of a shitty trader. So, whether it will be and this is good lessons for life. Consistency, dependability, reliability. Can I actually depend on you? Those are huge concepts, life lessons that really, no difference in trading. Do you actually do what you say you're going to do? That I think is probably a very good note to end on. So have yourselves a great day. If I don't talk to you, wish me luck on my vacation. I think I'm literally just going to turn the computer off and force myself not to even look at any of this for a week, and then maybe I'll come back and not be so damn salty. All right, have yourselves a great day. All the best, hugs and kisses. I'll see everybody in the after party. We'll do Q&A there. Yes, I do see the YouTube comments, but like I said in this free video, don't really want to talk too much about answering questions and stuff on the free video. I would much rather do that in the after party. So come join us in the after party, and then we can shoot the shit all you want. All right. Have yourselves a great day. PMA for the win. Hugs and kisses. And bye for now.